Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, and this podcast is dedicated to helping you as an accounting professional have the premier accounting business in your area. We focus on the things that allow you to offer quality accounting services, getting paid what you're worth, working on the tips and tricks that the experts provide us related to marketing, selling, onboarding, training staff, offering quality services, extending what you're doing with your clients to improve client relations, and so much more. Each and every week we have on the show a variety of experts to actually have a discussion that you can learn from. So get ready, sit back, take some notes, and enjoy the conversation. Now, with regards to today's guest, I have an exciting person to have on here. This is Kim Curtis. She is a nationally recognized wealth management advisor and speaker. As president and CEO of Wealth Legacy Institute, her groundbreaking work in developing a highly personal, client-centric planning model was recognized in the Journal of Practical Estate Planning, winning the Editor's Choice Award. Now, this is a model that is the cornerstone of her firm's holistic and highly successful approach to integrated wealth management, the Planning for Life experience. Kim has attained numerous professional designations and been recognized by the financial planning industry as having achieved the highest level of competence and expertise. In fact, Kim is a best-selling author of Money Secrets, Keys to Smart Investing, and Kim has spoken on leadership, negotiations, and finance to organizations such as West Point, Oracle, EPA, University of Colorado Hospital, Comcast, Level 3, CenturyLink, OtterBox, Johnson & Johnson, amongst many others. She has been profiled on NBC, CBS, ABC, Fox, CW, and Wall Street Journal. Now, during her free time, you can find her sailing, skiing, or golfing in the beautiful Rocky Mountains on her favorite, or doing her favorite guilty pleasure, such as reading People magazine. So with that, it's nice to know someone's still reading a magazine out there. Kim, welcome to the show.
Oh, Roger, thanks so much.
This is going to be a great discussion. I think as we work with our business clients, we oftentimes see success. We ourselves are no different than everyone else. We need to be planning for our future retirement. And as accounting professionals, we're dealing so much with money. So I'm excited about the conversation we're going to be having today. This is where I'd like to start. The first thing is, what is different in your mind between accounting and finance? Where's that distinction as we're talking to people?
That's a wonderful question, since they blend so well together.
Uh-huh.
So I would say that finance is really more of a holistic piece of how you bring these other elements in. Because remember, my background is really more financial planning, wealth management. So we think of cash flow, which so does accounting, protection planning, investment management, and then the tax planning is a sliver, and then retirement and estate. So I would think the biggest difference from my perspective is really bringing that broader view to then be able to look for gaps and then come up with next steps.
Well, one of the things that I've experienced as I've worked with clients is accounting obviously is more considered a business-related function. I'm always impressed, even in my own household, how little accounting we actually do managing beyond just balancing the bank account, perhaps. And so when we look at business, I think we sometimes forget, as we work with business owners particularly, that once they've taken those dividend disbursements, they've received their payroll, their gains for all that hard work that they're doing, there's a distinction between the accounting that's going on to keep track of all that and kind of run the business and manage it, and then taking that asset and diversifying it, managing it, trying to plan for the future, prepare for retirement, and have some type of a game strategy for what we're going to do with this money when we are settled, let's say, only because of the fact that we've worked so hard in business and the accounting is keeping track of all that, but it's basically, in my opinion, a means to an end. The accounting is basically so that we, at the end of the day, can be profitable, and with that profit, be able to live a lifestyle that we can all enjoy. So I think the two go hand in hand. I might be getting off topic here, but my biggest referral partner, the one that I tend to get the most clientele from as I work with business owners, is honestly wealth advisors and financial planners, because they are working with business owners that so often tie up their assets in a single business. They reinvest because they have control over that, and they fail to diversify and get out there. So the wealth advisor is wanting that client to come to me to more or less give the business owner permission and, in fact, encourage them to take some of that asset out of the business, diversify it, and start planning for their future. And so it's a symbiotic relationship that I tend to have with my referral partners, the wealth advisors and financial planners. So does that give a little bit more context, do you think, to the conversation we're having?
Absolutely. I think that from the financial advisory's perspective, the CPA is the most trusted advisor. And so having that partnership for referrals is significant for you, but also for us, because we see some of that tax planning strategy area, and yet it's not our wheelhouse. So to be able to really feel confident to refer to a practitioner that is more strategic than that has a forward-looking view versus a backward view of just tax preparation is a game changer. And to be honest, Roger, I don't. There's no, it's hard to find those practitioners, and when you do, they're gold.
You know, I want to apologize for the accounting profession because of what you're saying is so true. So many of the people I've worked with, unfortunately, and I'm referring to business owners, when I start to talk to them about the accounting that's going on in their business, whether it's an employee internally doing the books or externally, they've outsourced it. Either way, I'm time and time again amazed at how little communication is happening between the owner and the accounting professional to provide information about what's happening in the business at an accounting level. The accounting is the language of business, and yet the business owner just doesn't really have an understanding of what the business is trying to communicate. And so I've always felt that as a profession, we could do so much more communicating the information so that it can be more useful to them in their decision making. And this just lends itself then to the financial planning, because now that they're being profitable, making money, and you're having this tax strategy, you're having a plan, say a budget or forecast for the coming years with a pro forma, all of those things are planning. It's all forward thinking. It's not the historical recording of the transactions. It's so much more. And that accounting element is, I think, too often missing. Here's another question for you. Many of the conversations I have, some people are just not very clear in their own minds what the difference between a wealth advisor is and a financial planner, someone that has their licenses and such. How would you describe the two differences?
Oh, I'll describe it in my own personal story. I actually went into the business by meeting with somebody to kind of go through. I took a quiz. The quiz was like, what would you do later in life? And I actually have a legal background, so I wanted to make this transition into something different, and that I could own my own business. And this person said financial planning, finance. So I actually went with a firm that I thought was good at the time. And years later, realized when I finally read the very small print on the back of the statement that I was not a fiduciary like a CPA or an attorney, but I was in sales. I was a broker, and I was working for the house, not the client, even though my heart was for the client. The pay structure was not. And I'll never forget when I read that, how devastated I felt at myself, and also how to do a better job for the client moving forward. And that's when I created Wealth Legacy Institute. So here's that distinction that is so important, that is so misunderstood in the industry. So a wealth management advisor, or someone who is a fiduciary, is somebody that has to always put the client's interest first and has no conflict of interest as it relates to how they're compensated. So they don't sell product like life insurance policy or disability or annuities or different things like that. So they get compensated based. It could be an hourly rate. It could be based on the assets under management. And the opposing, or the opposite, is those that kind of say they do both, that they get paid with a fee structure on assets under management, but they also sell product. And those are the ones that are most confusing, because sometimes they're a fiduciary and sometimes they're not. And so the biggest way to differentiate as an accounting firm looking to who to partner with is if they're attached to a brokerage firm, it's usually fine print on their business card or on their website. And we have a form on our website that is kind of the fiduciary oath. And you ask them to sign this fiduciary oath that they're going to be your fiduciary in all transactions and all conversations. And once they sign that, you absolutely know that they work for you, not the firm that relatively employs them.
I appreciate that description, because I do feel that there's a confusion out there as to what's going on, and that fiduciary element is, I think, very helpful, particularly when we're referring our clients to work with someone. It's kind of nice to know that they're going to be working with someone that has their best interests at heart. Now, one of the things that I think is very helpful here in this part of the conversation is the whole idea of wealth management planning for retirement. I think bodes well with the idea of beginning with the end in mind. When I'm working with my clients, one of the things I always want to literally start with, is why are you in business? What are you trying to accomplish? And when this is over, what do you plan on doing? And honestly, that question, it's sometimes the very first time they've been asked it or have considered it. Now, there are those rare exceptions where somebody starts the business with the intent of selling it and they have an exit strategy already in mind. But so often it's just, they're working, they're happy, and they just don't know how this is going to come to an end. When involving a financial planner, what kind of things can an accountant and a wealth advisor do together to benefit the client? How is this helpful to the client?
Mm. Stephen Covey, begin with the end in mind. That's such a beautiful question to add clarity as to their purpose. I think a lot of people want to go into business and be entrepreneurs and start an accounting firm. And they're great as a technician, as a practitioner, but miss the business side of it. And honestly, the business side of it is really, can you sell yourself?
Mm-hmm.
And how do you do that? So to collectively work together in terms of a team approach is stay in your lane. And yet collaborate by staying in your lane for a better outcome together. So when I think of that, I say stay in your lane more primarily for the wealth management firm to understand, because they know a lot about tax strategy, but they're not CPAs or tax preparers. And so I guess the best way to describe it is, if you had a pyramid,
Mm-hmm.
and the bottom of that pyramid is managing money, which is oftentimes why people come to us. And often when they feel like they need to go to an accountant in terms of when it gets a little more complex. But managing money is the reason people come to us. Above that is achieving goals, kind of that begin with the end in mind. And then if you go up that pyramid, the next is lifestyle. It's peace of mind. And our job is to get people through the process of managing money through goal setting is financial plan, tie those together so that they can get to that next piece of lifestyle or peace of mind. And if they have peace of mind, they have the ability or the space to get to the top of that pyramid, which is impact. So if you think about it, everything is frenetic, money is on top. But if we could put money on the bottom as a foundation, with their goals as their vision that has them move forward, it gives them the space to then think impact and why are they here? And so collectively, I think of charitable giving. I think of different types of purpose for them to get them to that place of a bigger vision and leadership around that is priceless. And I think both practitioners, wealth managers, and accounting professionals have the ability to get that entrepreneur there quite easily through structured process.
Your description there, I think, is very helpful. It reminded me of Maslow's hierarchy of needs,
Yeah.
where you're saying impact. He's referring to it as self-actualization. It's your purpose. What's your legacy? What are you going to be leaving behind? And the thing that's coming to mind is a conversation I literally just had this past week. Two different ones. One was, at the end of the day, the business owner just really didn't see how to extract the money out of their business as they were considering, not necessarily liquidating, but they just wanted to remove some of the assets out of the business and start enjoying life a little bit more. And that was very timely and appropriate. But related to that conversation, I know of someone else that is, they never married, never had children. They're getting to the point now where they're more conscious of retirement, and they've got a substantial nest egg. They're very happy, but they just didn't know what to do with their money, and they didn't have a sense of purpose. And what I'm hearing you describe is taking it beyond just the purpose of making money. It's for what purpose and what intent, and how's it going to benefit those around you. So when I'm, as an accounting professional, working with someone like you, taking care of the tax needs that the client may have and so forth, what are some best practice principles? What are some questions that you typically find are helpful to try and maybe address planning and being prepared for retirement?
Oh, well, we have a slew of things that we ask, but I just love this one is, what is something that you used to value, but you don't anymore?
Interesting. So when someone hears that question, what kind of answers have you heard?
Long pauses, because it's an unusual question. And it's interesting because it could be something like, well, I used to value making money. Like I loved it. And then I got to a place where I was bored and I kind of want more enrichment, or I want to do more for the greater good versus taking, I mean, I took care of my family, they're set, but now I need to have a bigger vision for myself to stay engaged. So I think, and that could be, depending on where they are in life, the answer to that question is very different.
Mm-hmm. I've had this very question, and it's similar to what you just said. It's basically, which is more important to you, fame or fortune? And
Mhm.
what are you working towards? And it's interesting how people will assess that. There is the long pause, and they'll just kind of determine, what am I really doing? Am I going after this for recognition? Do I feel I can make a difference and be recognized for it, or is it the money? Am I just trying to be financially prudent? And it causes people to just really question what they're doing and their motivations. Honestly, there's no right or wrong answer to it.
Mhm.
It's
Mhm.
it's purely perspective on anyone's part. Who knows what they're really thinking? But it's a great question to ask to get someone thinking. Um, Here's something that I also think that's very appropriate for our conversation today. I had a meeting with a number of accounting professionals 2 weeks ago, and we brought in someone that is a wealth advisor, for lack of a better term. And as we were having a training, a meeting, we were listening to this individual. And one of the talking points that really spurred a great conversation with the accounting attendees was the law of 72.
Mm.
And because of that conversation, I wanted to bring it up here today. What is it that the law of 72 is, and why is it so important? And then let's see where we can go with that.
Sure, sure. Before I answer that, I just want to comment on what you shared earlier on that last question is no amount of money can create an extraordinary life. And so our role is to help them get past the money so that they could ask themselves deeper questions. And so, it's no amount of money, no amount of rate of return. So how do we get that conversation to a deeper place? So I just wanted to comment on that because it's just everything about what we do as a firm is around that because the money piece is really, really easy. Managing money is easy. There's a science to it, which a lot of people you don't realize that because Wall Street wants you to know something else. But
Yeah.
it's actually very, very simple and structured and disciplined. And once you take away speculation and forecasting, and allow for that structure tied to a financial plan because you need the emotional discipline of the financial plan to manage the downward cycles of capital markets. They ebb and they flow. It's just a natural law. Money is the same way. Ebbs and flow, giving and receiving, all of those things are part of money. And for the person to understand the human made laws, which is what I do every day, and the natural laws of money, and together is what a balanced, fulfilling life is. Because on their own, individually, you could have all the money in the world and be unhappy, or you can understand natural law and have no money. And so the two together is what creates balance. So I just wanted to comment on that.
Well, I appreciate you bringing that up, but I'm going to actually interject there before we get to the law of 72, because money is probably more than anything an emotional relationship than something that's rational. I mean, you're looking at it, I think, in a very pragmatic, rational way, which we all should do because then we're not so emotionally attached to it. But people have emotion tied to whether or not they have enough and whether or not they have a sense of security that can be derived from it. And some people have unhealthy relationships with money. They don't know how to hold on to it and manage it. And it's more of an emotional struggle than it is a rational struggle. Would you agree?
Oh, you're speaking to yes, absolutely. I mean, when I think of my early story around money, my parents got divorced when I was a teenager. My mom had full custody of three teenage girls, and she didn't have a skill set. So we ended up getting government assisted lunch. And I had this little red ticket that I had to hand physically every day to the cashier at lunch. So the shame, humiliation around that was huge. So when I think of here I am, the CEO of a multi-million dollar wealth management firm, what happened? Right?
Mm-hmm.
And so for me, what happened was that understanding what is my money story from historically, that the money was for someone else, not for me. Why is it not for me? What do I need to do to change that? And raise your money set point. Because we all have a thermostat on how we view money and what we think is enough for us.
Yes.
And to be able to raise that thermostat, that set point, as we grow and become more astute around money, and to continually raise that to a point that you feel like you have what's in alignment with who you are and how you want to show up is important. So I feel like I just recently raised my set point about 2 years ago. I didn't know I was stuck.
Yeah.
So to continually do that and be in alignment with that and ask yourself those questions to unwrap what those stories are that you tell yourself. Because if you haven't had that conversation as a business owner owning an accounting firm, you're going to stop at this level of comfort. And then all you've created is a job for yourself instead of a business that you can sell later.
Yeah. You were very open there a moment, and I'm going to kind of dive in with what you just mentioned a moment ago. Like you, I was raised in a family where we did not have financial stability or security. The food lunch program was something I participated in from elementary school all the way through high school. Like you, I was going to the office to receive my 5
Mm.
tickets that were allotted to me for lunch, and I would get in line and with the other students go get my lunch. And I never, at least I don't recall feeling embarrassed or diminished by that. But what was interesting as a dynamic is just from high school as a perspective. I lived in a city where we were one of the poorer parts of town. And so it was people that were on some assistance and so forth. But in the same high school, the boundaries were such that we had the one of the wealthier parts of the city, gated communities and so forth. And so there were those of us that were on assistance while there were other kids that were driving BMWs, Porsches, and so forth that they received when they were 16, 17 to go to school. And it was an interesting dynamic, but I fared well. I don't remember being, let's say, scarred by it. But from a financial point of view, my attitude towards money did change. I went from a scarcity mindset where
Mhm.
I didn't think it was easily obtained. It took hard work. And when you got it, you wanted to hold on to it. I'm still someone that will forgo getting a $1.50 drink at 7-Eleven just because I need to hold on to the money. I work too hard for my money, and so
Yep.
I have this tendency to hold on to it. It has only been recent that I've felt, I've got enough. I'm able to enjoy it. It's okay to spend the money, and it is an emotional relationship with the money that I have an abundance mindset now. There's plenty of it out there. I don't need to worry about it. And my life is a lot more stress free because I'm no longer in this I've got a hustle kind of attitude to make the money. And it's fascinating. I still work as hard. I'm still a workaholic, but regardless, I am much more relaxed about the entire process. And I see my fruits of my labor a lot differently. So what
Mm.
you shared a moment ago is so true for me and something I can relate to. So thank you for sharing that. You were going to say something else though before we got to the law of 72. Was there something more you wanted to share?
Well, I just so appreciate your story because what we both described is two different experiences from the same thing.
Mm-hmm.
And so recognizing that we because of the stories we told ourselves.
Yeah, that's
And
right.
so that's really important to understand for the listeners is what story are you telling yourself around
Yes.
money? And then why do you not think you're worth it to have whatever that new set point is? Because like I said, you and me both recently have to check in. Okay, let's raise our set point on what we believe, and from scarcity to abundance, and knowing that we are worthy, for me as a woman, and capable
Mm-hmm.
of earning whatever I need,
Yeah.
or it will be here. Not necessarily the word earning. And so to change that mindset, I love the word that you use, scarcity, which is such a perfect word, and then going to the abundance mindset, which sounds kind of not hokey because you hear those words a lot, but it's so true to raise your set point to a lifestyle set point that is big versus not enough.
Well, what you're describing there, I admit, for some people sounds hokey because it's simply a word, but that
Yes.
word is so representative of a mindset. It's how people live their lives. When you are in a scarcity mindset, there is an anxiousness. There is this fear of loss that is going on. There's a whole bunch of emotions tied with that simple word, scarcity. You transition to abundance, you see opportunity, you see
Mm.
potential, you have a much more gratitude oriented feeling about what you're doing in life because you feel that it's all there for the taking and everyone can have enough. One of the things that's unique about the abundance mindset is you get away from the belief that if I have, I took from someone else. Because I got,
Mhm.
someone else lost. Abundance doesn't mean that. Abundance means we can both have it. There's enough for both of us when it comes to clients, when it comes to money, when it comes to things, all the way to love. I think love is a great example of it. Sometimes people
Mm.
wonder, if I have two children, do I love the first one half as much as the first? Do I have 3, 4 children? Do I each love them a quarter of what I originally loved the first? Of course not. That love is abundant and it's ever growing. And I think when you become a parent, that's something you experience, which is this love is infinite. I've got enough to give all of these children, and that's amazing. So, yeah, scarcity, abundance. I could have an entire conversation
Mm.
about those two talking points. Um, we're still not getting any closer to that 70 law of
And
72.
I love the rule of 72. So let's talk about it. But I hear your joy in your voice. And that's what's beautiful about that. When you express that, it comes through your voice, and that's how powerful abundance is.
Mm-hmm.
So let's talk about the rule of 72
Let's do
because
that.
I love this definition, and it's a really, really quick way to estimate how much money you have and how fast it will grow or double. And so the rule of 72 is, let's say you anticipate getting an 8% rate of return over time. So you divide that assumed rate of return by 72, which is 9. And what the rule of 72 says is approximately within 9 years, let's say you had 100,000 will double to 200,000. And it's just this really beautiful, quick way to kind of get a sense of this compounding effect of money to that, and then think, okay, well, now I got 200,000, rule of 72. Let's just use the same number, 8, another 9 years, I'll have 400. And so it's very simple way, and it's popular to kind of just get a sense of where you could be based on different things.
Now, what's so insightful to this conversation is the converse of that, the flip side. So you're either paying interest or you're earning interest. And so if you're buying something that you purchased for $100,000 and you're paying 8% interest, in 9 years, you will have paid $200,000 for the item you acquired for $100,000. And I think that's fascinating because as accounting professionals, we're oftentimes dealing with people that have lines of credit. They are paying down their
Mm.
credit cards or carrying balances for that matter on a credit card. And when you're dealing with like a 20% interest rate, very
Mhm.
quickly, those things that they're purchasing and putting on credit, the amount of money that is paid for those things is twice as much than what they originally paid in the purchase price. And so when you have that contrast, I think it really causes us to get out of debt as fast as we can and consider how are we maybe using lines of credit and so forth to leverage money, but at the same time earn through interest the things that you're just describing. So powerful thing for a conversation with our clients, wonderful thing for us to consider personally as to whether we're earning or paying interest. And if so, how are we leveraging that? Because admittedly, you can, like with real estate in the current market, you've seen a lot of people invest in real estate and probably make more in the equity gain than they did in an income for the year. There were plenty of people that made more money in their real estate just appreciating than they actually made in a W-2 paycheck. So fascinating things with regards to the law of 72 and understanding how to make it a plausible thing you can leverage in your own wealth management. So is there anything more you'd want to say about this principle?
Yeah, it's a math calculation, but it's accessible.
Mm-hmm.
So that's what's great about it. And the fact that you brought the debt side of that equation and interest is very interesting because it's important to understand that from a debt perspective. But it's also take it from an even larger viewpoint. I mean, you can do this for GDP or inflation.
Mm-hmm.
So think about the rule of 72 in a lot broader term than how we just described it.
So we've covered law of 72. We've covered here abundance and scarcity. We've kind of defined wealth management, financial advisor. We've introduced kind of this relationship that an accounting professional and a financial person may have in their taking care of clients. One of the things that I want to bring up now is what is it that you see accountants doing that could be helpful for clients? Best practices. What are we doing right that really makes a difference?
It's interesting. Your industry and my industry is in deep transition with tech and the integration of tech and disruption. Um, it's always a human element. It's always a human element because that's a differentiating factor that gets you away from tech. Why would someone not want to use TurboTax because they have a relationship with their tax preparer?
Mm-hmm.
So, and that relationship involves being proactive. It doesn't take a lot, just being proactive. Um, I had a situation just last week where the accountant filed an extension for the client, but never talked to the client. And so the client was like, I didn't even know I filed an extension. And that's just one thing. We all have stories in my field as well. So I think what accounts that I see that really do well is they're proactive, they communicate, and quite frankly, they actually like being around people. Because remember, success in our businesses is relationships. And again, we can be great practitioners of the craft. But if we can't have a conversation and explain what we do to the person on the other side where they feel comfortable and in control, then we haven't done a very good job. And so what's the purpose? Why are you here as a practitioner?
Mm-hmm.
To do tax returns, to be strategic, kind of that's the first question to ask. And then how do you create a firm that gives you joy? And I think if you stay within alignment of what gives you joy, then the client will receive that on the other side. So that's yeah. So that's a two-part answer, I guess.
Yeah, if you're happy, they'll know it. Yeah, well, I actually heard three things there that I thought were very helpful. So you brought up technology. I know that the industries are changing quite a bit. You're leveraging technology as well as the accounting professionals so that we can really do our job more efficiently and quickly, and that's great. But one of the things that I think so often happens is because of the technology, we don't realize how distant we're possibly making ourselves from the relationships we have with our clients. And that brings me to the second point that I thought you made very well, which is we need to be still seeing this as a people business. We have to be approachable. And this brings me to the third thing you said, which is communication. So what I'm hearing is let's embrace the technology. We do need to understand, use it, and leverage it in our business. We need to make sure we're communicating with our clients, even though there might be things that are obvious that we should be doing. We need to communicate that to them and help them be involved in the process, at least feel as if they're participating in their own finances, accounting and investment. But the third thing is we just always can't we can't forget this is a people business. This is obviously working with people in a very trusted environment.
Yes.
I've always been told accounting professionals are the most trusted people they're working with, and I'd have to include financial people. It's oftentimes that the two of us know more about an individual than anyone else they speak to, especially when it comes to their financial situations. It's a very personal, very sensitive relationship. We intimately know things about them that probably no one else knows. And that's huge because of the trust that's going on there and providing that safe environment that the client feels comfortable to be vulnerable and to think out loud and plan. So I like the symbiotic relationship that we both have with the same client.
I love what you just said, Roger, because I actually had goosebumps a little bit because the two practitioners together that are at their best understand their stewardship role. And to do that, because the business owner needs you, needs you. Our job is to convince them they need us. And to diversify but usually we're not in the picture until there's some kind of qualifying event, something significant happens like the sale of the business or something else. But prior to that, they don't know what they don't know. So if you have that relationship with that business owner, it could be even just taking them out to lunch or meeting them for coffee, whatever it is, then you're getting the information from the business owner that he may not know there's an issue, but you hear it from the conversation. And I think that if you can be proactive in that way, because they don't know what they don't know, that is a priceless seat to be in. And that business owner will have you in every single meeting because of that trust.
Yeah. Once you acquire that trust, you're very very important in their decision making. They start to lean a lot more on you at that point. I've got two quick questions here, and then I'm thinking we're going to kind of tie this up. So the next question is this: you're in a situation where you're dealing with people that are obviously more end game oriented. It's regardless of their, I don't know why I said that, regardless of their age. You could be 20 planning for your future. You could be 55 planning for your future. You could be 70 planning for your future. But the point is if someone has been reluctant in their life to start planning, what is it like? What is your onboarding experience? The questions you typically start with that helps a person start planning for and having that conversation about their retirement.
Yeah, success as a practitioner, business owner, comes down to systems. And if you don't have systems, you're just repeating it over and over without continuity and efficiency. So we call our onboarding the planning for life experience.
Okay.
And it's very structured. If you drew a line across a board and we would call that the financial planning horizon. And above where the horizon is vision, values, and goals.
Okay.
And below that planning horizon is strategies, tactics, and tools. So below, we can do that in our sleep. We do it all day long. It's what you do and what I do. Strategies, that's what we're trained in. If you draw a line down the center of that to create kind of like a bullseye, and then you've created 4 boxes, that top right box is the first phase, and it's above the horizon, and we call that discovery. Below that is design, building out the financial plan. You're below the horizon. You go over to the left, and that's make good, and that's where you implement the plan. And then you rise up above that line to grow or confidence. And the center of that bullseye is peace of mind. So you take a pen and you work your way around that circle. And so you need the discovery, vision, values, and goals. So what has to happen in the next 3 to 5 years for you to feel happy about your life?
As you're describing that, I'm visually, with my eyes closed, following you as you're drawing this out with the line, the quadrants and so forth. So
Yep.
continue, because I'm getting a visual image of this.
Okay, thank you. I appreciate that. So the top right quadrant is discovery, and that's where we ask all kinds of questions. The very basic one is what has to happen in the next 3 to 5 years for you to feel happy about your life. And then we do the what are your strengths? What are your concerns? And kind of do the SWOT on that. But the bigger questions that we do in that discovery is we have a financial DNA. It's some technology that we use that can give us an understanding of how you react when markets are great, everyone is aggressive and they, oh, my risk tolerance is high. When it's not, they're not aggressive. But this allows us to get through all of that to like when you're 3 or 4 years old and you're stressed, how do you respond? So we call it that financial DNA. And the other thing we do in that top right quadrant is we call it humanographics. And it's like plotting a family tree, getting the structure of the family down, and then asking questions about tell me about your grandparents. Where did they come from? Oh, they came from Scotland. Okay, tell me about that. What were their occupations? Do you know about your great grandparents? And we work our way down through their children to plot not only structurally, but then we take it to another level of who's the first educated? Is there a black sheep? What were their occupations? Who had the money? Who didn't? Was there a sale of the business? So it graphically shows us some of the dynamics of that family that allows us to see, okay, this family, this area, like we could do strategies, tactics, and tools, but this family can't handle that. So what do we do differently that's tied to the values of this family so that we make sure when we design that plan, it's consistent with their vision, values, and goals, not save tax, mitigate, transfer money, and eliminate taxation or defer. So top right, discover. It allows us through some of those discovery techniques to go down into designing the financial plan. And the top gives them the clarity. They know more about themselves so that when they go down and we show them the plan, they feel comfortable making decisions around that plan because it's their plan, which is the other side of the bottom below that horizon. They make decisions quickly, which is rare in the nature of dealing with individuals that have complex estate planning and tax issues with business owners. And once they make those decisions, it allows them to go up above that planning horizon to confidence because it's their plan. They know we understand who they are. As you said, we know more about them than anyone, especially after going through humanographics and the planning for life experience. So then moving forward in that planning element, it's a lot easier to have those difficult conversations because they've gone through these different activities that allowed them to be vulnerable and allowed us to get deeper to be able to find the pieces of the family that we have to be nuanced as it relates to the plan we design. That was a big answer, but I hope it helped.
I think it did. I mean, this planning for life experience is something that is conscientious. There's decisions that need to be made, and everyone's going to be unique. Some people may have a desire of travel and experiencing life. Some may have concerns about their ability to meet their costs as they may become. I'm trying to think of the word. Not debilitated.
Incapacitated.
Incapacitated.
Yeah.
There's the word. Other people might want to leave a legacy. Other people may want to travel. I think I mentioned travel. So it just varies as to what they see those next chapters in their life to be. And as they can communicate that to you, the planning can be started to actually experience with very, very a lot of confidence that type of lifestyle. If it's the travel, if it's I'm incapacitated and I need to be able to fund that, leaving a legacy for my children, what's the priority? And those people get to decide it, identify it, and then define or establish a path to achieve that. So I like what you're doing. I'm going to switch gears. I said there's two things. The second thing is this. Obviously, you live a vibrant life. You're out there doing and enjoying many things. You talked about sailing, skiing, golfing. Pick one. What's the one you really enjoy the most?
Sailing. And I live in
Sailing.
Denver. What's wrong with that picture? I love sailing. I love.
Where do you go sailing? That's
we
what I
have
was
some
going to ask.
reservoirs, of course, like you. We have some reservoirs, and actually, the sailing is very complex here because the wind with the mountains can change on a dime. And that, you can 1 minute have the wind in your face and you're just beautifully sailing and it's quiet and beautiful. And then the next wind hits and, you're in the irons and you have to get your sails tightened and to really recover. And I love the uncertainty around that and the beauty and quietness around that. Yeah. And water, of course.
That is amazing. I have two friends that have sailboats, and one of them is refurbishing his currently, and they just love it. It's a big project. It's a labor of love. He has a plan of actually taking it here from Utah, going down to the Gulf, and he wants to then sail the Gulf and go down through the Caribbean and so forth with his. So some grandiose plans, and he's moving towards it. And I have no doubt whatsoever that he'll achieve it. So it's quite impressive. Kim, having you on the show today has been amazing. Here's what I'm going to do. I'm going to wrap this up. I've got an offer I want to share with the listeners, and then I'm going to summarize what I feel we've discussed and come back to you for a closing thought. So first of all, regarding our offers, real quick for the listeners, what I want to encourage you to do is go to the episode description. And in the description, you're going to find basically 3 things that you'll want to take advantage of. The first is a retirement secrets workbook that Kim's presenting to us for free. It's a retirement secrets book that shows you how to live a vibrant, more joyful, and abundant life. It provides practical, powerful steps and strategies to help you grow and thrive in retirement. It really does address what we were sharing earlier, this idea of beginning with the end in mind. And then she has a second bonus that I think a lot of us might appreciate. My mother is aging, and this is relevant to me. It's a guide to aging parents. Kim shared with me off the show that she recently had her mother pass away, and it's from this experience that she created this excellent guide for us. It's basically helping realize that your parents have needs, and there are signs that your parents have concerns that you can address and obviously bring more peace of mind to their current situation. So this guide will help you start these delicate conversations that will make this transition more organized with a clear plan that honors your parents' wishes. So for those of us that have parents in that situation, this would be a timely thing. But more importantly, we could be sharing these same resources with our clients. The last that I'd like to mention is a course called Money Management 101. It's an excellent program for anyone dealing with money, which is all of us. It's particularly relevant for people that actually have children that are teenagers, young adults, especially newlyweds, people that have been involved with foster care or single parent homes, where money is something that is sensitive and sometimes difficult. It allows them to break the chains and understand exactly what it is at a very basic level to money or manage money effectively. So take advantage of these offers, going to the episode descriptions and getting those there. Now, with that being said, I'd just like to summarize today's conversation by simply saying that I think when we work with our clients, we have to understand that the client we're working with is both a person and a professional, which is to say, we're helping them oftentimes in the professional spectrum, helping them run a very profitable business and take care of the accounting that's associated with that. But likewise, this professional has a personal life, and they're in a situation where they're trying to, through that business, have a means to an end. They have a purpose. And if it's even not clear in their own mind what that actually is, we can help them now start addressing it. And honestly, as I've had these conversations with my clients, I have found that the more clear the end is, the more excited and energized they become again in their own business to realize and make those things happen. And so with the conversations that we've had today with Kim, we address what is wealth management and financial planning. I thought that was a healthy discussion. We talked about very briefly scarcity and abundance, that mindset that I think we all have, especially wanting to have a healthy relationship with money and just understand that it is more emotional than it is rational. The one thing that Kim also helped us address is the law of 72. She gave an excellent understanding or explanation of that, and I'd encourage everyone to be aware of what that principle is when working with our clients. And then lastly, what stood out to me is this conversation about just basically retirement planning. She's got this excellent process that she uses with her clients, which is the planning for life experience. And I was closing my eyes and walking through as she spoke what that experience would be like to just basically ask the right questions and conscientiously plan for the future. So this has been a great conversation. I appreciate you being on the show, Kim. What do you have as a final thought?
Roger, thank you. Considering we're both in the money business, And yet no amount of money can create an extraordinary life. It's never about the money.
Well, if it's never about the money, we're out of business. I'm just kidding.
It's always about the money to understand it's not really about the money.
That's true. Well, the money is but a means to an end is the way I always look at it.
Yeah.
If we're not properly utilizing it, it's just never going to be enough. And so there you go. Kim, thank you for again being on the show. I do want to encourage everyone, if you haven't already, subscribe to the podcast. Each and every week, we have an excellent guest on to actually address various topics that relate to you having the premier accounting firm and offering quality accounting services to your clients. Now, with regards to the podcast, you can listen to our episodes that come out weekly. Those you can set notifications on your preferred platform to receive those. And then at the same time, I want to also point out that we have additional free resources that you can check out at universalaccounting.com. It's there that we've got information related to your business to, in fact, have the premier accounting firm in your area. Now, in addition to all of this, we also encourage you that if you'd like to apply these principles and learn more about what you can do in your business, give us a phone call. You can reach us at 801-265-3777, or you can also visit us at universalaccounting.com. But always remember this, if it is about accounting, it is universal. And for that, take care, have a great day, and be safe out there.